I see you.
Yeah.
Good morning, everybody. I am here today with Tiffany Walker from Elite Service Mortgage.
Yes.
And today is day one of our series, Breakfast with Tiffany. So these are going to be short little videos, little mortgage light bites for you to get some little more information on what's going on in the mortgage landscape today. So my big question is, I know a lot of people ask me, they're like, oh, I saw the Fed interest rate came down. And a lot of people get that confused with the mortgage interest rates. So explain to me how those are different.
That is a great question because they're somewhat related, but the function is different. So your Fed funds rate is determined by the Fed, and that really determines your overnight bank lending rates. So more of your short-term rates, your credit cards, your car loans, a lot of those are based off of those short-term rates. Now the mortgage rates are based off the mortgage-backed securities, more like bonds. And so with the mortgage-backed securities, those are more forward-thinking, and those are set every day. Kind of like your stock market goes up and down, mortgage rates can trend a little bit up and down too, like a little seesaw.
Okay.
But those come out every single day, typically across the country between 10 and 11 o'clock.
Okay, so if somebody, because my husband said the same thing, he's like, oh, I saw the mortgage rates went down, under 6%. And I was like, or no, he said the interest rates. And I was like, well, it's not exactly what you're thinking it is. And so I think a lot of people get confused by that. So that's good information to know. So where do you see the rates going in the next 30 days? Today is September 4th, 2024.
Well, interest rates over the last few weeks have actually gotten a little bit better for mortgages, even though they have not touched the Fed funds rate. They're going to meet later in September. But what the mortgage markets are looking at is we're more forward thinking. We're already anticipating that they're going to at least drop the interest rate, the Fed funds rate, a quarter of a point or a quarter basis points. Now, they could do more, they could do less. There's a lot of jobs data that's coming out this week that might determine how much of a cut that they might do. So we're already baking in a little bit of a rate cut, and why you've seen some of the rates go down a little bit on the mortgages.
Okay. So just for example's sake, let's say somebody has a mortgage at 7% and it goes down to 6.5%. Is that a good window to maybe refinance, or would it be better to kind of wait and see if it goes down more? Like, would it make any impact really?
It could, and it really depends on loan amount. So if you have a larger loan amount, $400,000 or $500,000, a half a point reduction in your interest rate could be a great thing. If you have a $100,000 loan, you might need 1% reduction. It's all about how much of a spread it is for that loan balance and then the rate that you are reducing.
Okay. Well, there you have it. That's your interest information for today. Enjoy our mortgage light bites, and we'll see you next time. Have a great day.
See ya.